Hey, it's David Lukas here, and I wanted to take just a few moments to address one of the most common questions that I receive from clients who are referred to me by real estate professionals, financial planners, as well as CPAs whom I work with on a regular basis. And that question simply is this: David, what is your interest rate? And for good reason. The interest rate is the most understood component or equation of the mortgage transaction. So I want to take just a few moments to talk about that a little bit further. First, let's talk about what causes interest rates to move. What causes interest rates to go up? What causes mortgage interest rates to go down? Well, one thing and one thing only, and that is the trading of mortgage-backed securities which trade on the Chicago Board of Trade. Now, these mortgage investments trade very similar to, let's say, how stocks trade on the NASDAQ and the Dow. So that gives you an idea of how much interest rates move. And depending on what key economic reports are coming out on a weekly basis and other dynamics within the financial markets, interest rates, mortgage interest rates are literally moving hourly, daily, weekly. In fact, we've seen a lot of volatility since the Federal Reserve has removed their purchase program at the end of March of 2010, just here recently. So, just now that we have established the fact that mortgage interest rates move quite a bit and why they move and how they move, let's proceed just a little bit further and talk about that question, the interest rate. And I'm going to explain to you how achieving that all-elusive lowest interest rate can be somewhat problematic, and let me explain. Here's an example. Let's say that you enter into a purchase or a refinance transaction, and at the beginning of the transaction, the loan professional that you're working with, you decide to lock in a rate, and you feel at the time that you have achieved the lowest rate. You feel really good about the interest rate you've gotten, so that's great. So let's say 3 weeks into the process, you're getting ready to close on your home loan, and lo and behold, something very bad happens in the economy and mortgage interest rates drop. Typically, bad economic news causes mortgage interest rates to go down. So let's say in this scenario, the interest rates have now dropped 1/4 to 0.5% lower than when you locked in your rate, when you thought you had the very lowest rate that you could achieve. So now the question is, have you really achieved the lowest interest rate? Well, obviously the answer is no. In fact, most people would say, you know, David, I certainly wouldn't cancel the transaction, upset the seller if it's a purchase transaction, delay the closing, only to have the same scenario play itself out again if you were to try to find another lender to get a lower rate, and then it could certainly repeat itself. So now that we understand that this is somewhat a little bit challenging to get that lowest rate because rates are constantly moving, what you really need to look for in a mortgage professional when you're looking is make sure that you're working with someone that has their finger on the pulse of the market. Make sure you're working with a mortgage professional that has access to real-time mortgage bond quotes. And also that they have access to the key economic reports, and they are aware of what reports are coming out on a weekly basis and how they are going to affect mortgage interest rates at any given time. And then it really boils down to making sure that individual will help you in your best interest prudently lock in at a strategic time, because that is the closest thing that an individual can get to a lowest rate. Because honestly, myself or any other mortgage professional or a stockbroker for that matter in the equities market, if they knew what stocks were going to do, or if a mortgage professional knew exactly what interest rates were going to do, then I would be rich, that person would be rich, but obviously no one can predict the future. So it boils down to working with someone that can help you make a prudent decision based on the facts that they have before them, and then you can lock it in. So now that I've addressed that, one last thing I want to leave you with. When you are looking for a mortgage professional, make sure that you're working with someone that integrates your mortgage into your overall long and short-term financial plan. And let me just explain why briefly. Your mortgage is typically your largest debt that you take on in your entire lifetime. Your home is your largest asset. So when you enter into the mortgage transaction, you start looking for a mortgage professional, again, make sure that you are looking for someone that looks at your mortgage from the financial planning perspective, and you really want to make sure that you are utilizing your mortgage as a financial tool to help you accomplish your lifelong goals. And whether that be paying your home off early, building your net worth, saving for college, these are certainly things that need to be addressed at the beginning of your mortgage when you're either refinancing or purchase, because I have always said a great low rate on the wrong mortgage strategy can literally cost you tens of thousands of dollars of the life of the loan. So it can end up costing someone dearly. So again, one of the things that I do in my lending team that we do, of course we take a typical loan application, but we take it a step further. We have our clients fill out an online or in person a mortgage planning questionnaire. And simply what this does is allows me, prior to a consultation, to analyze that individual situation and to make recommendations based on those things that they're wanting to achieve. You know, what are their payment and equity objectives? How long do they anticipate living in the home? There's a whole host of things that one needs to take into consideration and make recommendations. And again, it all goes back to helping you achieve your lifelong goals. And your mortgage is such a large financial component of your finances. So, again, I hope that this information has been beneficial, has educated you, and helped you understand a little further in your pursuit as you look for the right mortgage professional. One thing I want to leave you with is I post daily to my blog, which is dailymortgagereport.com. Again, that's dailymortgagereport.com. You're going to find a lot of useful information there. And one thing that I want you to check out is to the left we have a link that says this week's mortgage market update. And every Monday morning I update the relevant mortgage investment or mortgage bond information that I just spoke about, as well as I post the key economic reports that are coming out and their impact on potential impact on mortgage rates. So this is David Lukas. Thanks for watching and make it a great day.